Welcome to the original Living in Santa Fe channel. I'm Benjamin Tercero.
And I'm Brian Tercero. We're local brothers and realtors here in the beautiful Santa Fe, New Mexico.
Now, if you're new to this channel, here's what we do. We're here to educate you on what it's like to be a local, and most importantly, to help you become a local by guiding you throughout your entire home buying experience.
We give you the real homegrown truth about living in Santa Fe, so that way you have as much clarity as possible when deciding whether Santa Fe is the right fit for you.
So if you're thinking about moving to Santa Fe in 2026, click that subscribe button so that you're notified every time we release a new video.
And if you're already planning a move to Santa Fe, please reach out to us. Call, text, DM, comment down below. We'll help you navigate the neighborhoods, the market, and all the local quirks.
In this video, we're looking back at what the Santa Fe market actually did in 2025 so that we can give you a clearer foundation for 2026. Now, going into last year, our expectation was that the market would slow compared to the frenzy years, but we also expected the market to be resilient and for values to remain strong. And guess what? That's exactly what happened. So let's break down what the data really shows and why it matters going forward. But before we do that, Brian wants to share the single most important takeaway first, in case the rest of this video feels a little bit dense. And if you understand this one idea, everything else we're about to walk through will make a lot more sense. Let's get to it.
So today we're diving into the 2025 market, but before we get into any of the specific numbers, I want to explain why we're even talking about them, because real estate statistics only matter if you understand how they affect real people making real decisions. Most market conversations throw out numbers without any context. Prices, inventory, days on market, and people are left wondering what that actually means to them. So every single time we talk about the market, everything really flows through one core idea: months of supply of inventory. If you understand this concept, the rest of the market starts to make sense. Months of supply answers one very simple question. If no new homes came on the market starting today, how long would it take to sell everything that's currently for sale? And that's it. It's calculated by taking the number of homes available for sale and dividing it by the pace at which homes are actually selling. And the reason this number matters so much is because it tells us who has leverage. Months of supply affects pricing power. It affects negotiation strength. It affects how fast homes sell. It affects whether buyers feel rushed or sellers feel pressure. If you understand months of supply, you understand why bidding wars happen, you understand why price reductions happen, and you understand why some homes sell quickly while others just sit around. Now let's talk about what that actually looks like in practice. When months of supply is very low, usually 0 to 3 months, we're in a seller's market. That means there are very few homes for sale and more buyers than choices. Buyers end up competing with each other, homes sell quickly, and multiple offers are very common. From the buyer's perspective, this feels rushed. There's limited choice, little room to negotiate, and pressure to act fast. From the seller's perspective, leverage is strong. Pricing power is higher, concessions are fewer, and timelines are shorter. On the other end of the spectrum, when months of supply rises above 6 months, we're in a buyer's market. That means there are more homes than buyers. Inventory builds up, homes sit longer, price reductions become more common, and negotiations start to favor buyers. Buyers have more choices, more negotiating power, and less urgency. Sellers face pricing pressure, longer timelines, and need a much stronger strategy to stand out. And then there's the middle ground, which is where most of the healthy markets actually live. A balanced or neutral market typically falls between 4 and 6 months of supply. This is where supply and demand are relatively even. Buyers have options, sellers still have value support, and homes sell, just not instantly. In this kind of a market, pricing really matters. Condition matters, quality and preparation matter. Buyers have time to think, inspect carefully, and negotiate reasonably. Sellers can still achieve strong pricing, but they need to be realistic and intentional. This is considered the healthiest type of market, not because it favors one side, but because it rewards good decisions. Now, it's also important to understand the extremes because they shape expectations. In the 2008 crash, many markets saw months of supply spike to 10 to 12 months or more. This wasn't a normal buyer's market, it was a systematic collapse. Demand fell apart, lending completely froze, foreclosures flooded the market, and sellers lost control almost entirely. Now, on the other extreme, during the COVID years from roughly 2020 to 2022, months of supply dropped to historic lows, often 1 month or less. That wasn't normal either. It was artificial scarcity driven by ultra-low interest rates and constrained supply. Buyers waived inspections, prices jumped rapidly, and emotion drove decisions. Those extremes tend to stick in people's memories, and that's where a lot of confusion comes from. So here's where we are right now. Based on current year-to-date data, the city of Santa Fe is sitting around 4.5 months of supply. The county is just under 5 months. Plain and simple, that puts us in a balanced, normalized market. We are not in a seller's frenzy. We are not in a buyer's collapse. We're in the middle ground between two extremes, and that has very real implications. For sellers, this means you still have equity power. Buyers are still buying and prices are still supported, but overpricing gets punished. Homes take longer to sell, and preparation matters more than it has in years. Now, you can still win, but you have to be smart. For buyers, this means you finally have options. You can negotiate, you can inspect carefully, and take your time. You don't have to feel rushed. But waiting for prices to crash hasn't worked. Good homes still sell, and well-priced listings are moving. You have leverage, but not unlimited power. The most important takeaway is this: a balanced market is not a weak market, it's a healthy one. This is the kind of market where smart buyers win, prepared sellers succeed, emotional decisions matter less, and strategy matters more. And that's exactly the context we need as we walk through the rest of the data, because every number we're about to look at, prices, inventory, days on the market, it's going to make more sense once you understand where the balance is.
All right, let's start with average sales price, because this is the stat that gets the most attention and also causes the most confusion. In 2025, the average sales price in Santa Fe City came in just over $1 million. In the county, it was just under that. Both were up a little over 7% year over year. Now on the surface, that number can trigger two very different reactions. For some people, it sounds like the market is still running hot. For others, it feels frustrating, especially if they were expecting prices to come down more meaningfully. So the first thing I want to do is slow this stat down and put it in the right context. Now, average price tells us the overall price level of the market, including higher end and luxury homes. And in Santa Fe, that matters more than it does in many other places. Luxury activity has always been part of this market, and when higher end homes sell, they pull the average up. That means average price is a useful signal, but it's not the whole story. What the stat does tell us clearly is that the market did not give back value in 2025. Prices didn't collapse. There wasn't a broad reset. Instead, values continued to move upward at a measured pace, which is basically what we predicted last year. Now, that's an important distinction though. This wasn't explosive growth, this wasn't a frenzy, but it also wasn't a retreat. For buyers, this is an important reality check. Waiting for a major price drop simply didn't play out in Santa Fe. People who stayed on the sidelines hoping values would fall across the board didn't see that outcome. That doesn't mean buying became harder in every way, but it does mean that price alone didn't become the relief valve that some buyers were hoping for. For sellers, this stat can be reassuring, but it also comes with a warning. Yes, the market supported strong pricing in 2025, but average price growth does not mean every home could push higher without consequence. A lot of sellers learned this the hard way. Homes that were well-positioned, well-priced, and well-presented did very well. Homes that leaned too hard on past momentum often had to adjust. And this is where average price can be misleading if you don't balance it with the rest of the data, which will be in the next sections. Because average price doesn't tell us how long homes took to sell. It doesn't tell us how much negotiation actually happened. And it doesn't tell us what the middle of the market experienced. What it does tell us is that the ceiling held. Capital did stay confident, high-end buyers didn't disappear, and Santa Fe retained its appeal as a place people were willing to commit significant money to. Now, that matters heading into 2026. For buyers, it means the conversation shouldn't be will prices crash, but rather how do I buy intelligently in a market that's holding value? And for sellers, it means the opportunity is real, but it's no longer automatic. Pricing, strategy, and preparation matter more than ever. The key takeaway from average price isn't excitement or fear, it's stability. This market didn't overheat in 2025, and it didn't unwind. It absorbed higher rates, slower pace, and more inventory without losing its footing. And that is a sign of strength, and it sets the stage for the next metric, which I think is even more important for most people, median price, because that tells us what the middle of the market actually experienced.
Now let's move to median sales price, because for most buyers and sellers, this is the stat that actually matters. In 2025, the median sales price in the city of Santa Fe came in around $715,000. In the county, it was just over $706,000. Both were up a little, over 4% year over year. That may not sound dramatic, and that's exactly the point. Median price tells us what's happening in the middle of the market. Half the homes sold for more than this number, and half sold for less. It strips out the luxury outliers that can distort the average. So when median price is rising, it tells us something important. Price growth isn't just happening at the top, it's happening across the entire market. But notice the pace. Median price grew more slowly than average price. That gap matters. What it tells us is that while higher-end homes were active and influential in 2025, the core of the market was moving forward at a more measured, sustainable rate. That's what a healthy market looks like. For buyers, this is an important reality check. If you were waiting for the middle of the market to meaningfully soften on price, that didn't happen. Core Santa Fe neighborhoods and typical price ranges remained competitive, not frantic, but supported. That means buyers still needed to be realistic. Well-priced homes in desirable areas continue to attract interest. And while buyers gained more leverage in terms of negotiation and timing, they didn't gain a dramatic pricing reset. For sellers, this data is just as important, but for a different reason. Median price growth tells us that demand didn't hollow out. Buyers were still active in the ranges where most transactions actually happen. That's reassuring, but the slower pace of growth also tells us something else. Buyers became much more selective. In 2025, sellers could no longer rely on momentum alone. Homes had to make sense relative to condition, location, and price. When they did, they sold. When they didn't, they sat. This is why median price is such a grounding statistic. It tells us the market wasn't overheating, it tells us buyers weren't panic buying, and it tells us sellers couldn't simply push price and expect the market to follow. Instead, the market behaved rationally. That's a big shift from the peak years, and it's a healthy one. Another thing median price helps us understand is what are the expectations for 2026? If median prices were flat or falling, we'd be having a very different conversation here. But steady growth here suggests the foundation of the market remains intact. Demand exists, buyers are engaged, and pricing power, while more restrained, is still present. For buyers considering 2026, this means the opportunity isn't about waiting for the middle of the market to collapse. It's about buying thoughtfully, understanding where value is and where it isn't. For sellers, it means pricing correctly matters more than ever. The market will support fair value, but it will push back quickly on optimism that isn't grounded. The key takeaway from median price is this: the Santa Fe market didn't lose its center in 2025. It slowed, it normalized, and it became more honest. And that's good for buyers, and it's good for sellers. And it's a strong base for the rest of the data we're about to walk through, especially price per square foot, which helps us isolate value even further.
All right, now let's talk about price per square foot, because this is the metric that gets us closest to true value. In 2025, price per square foot in the city of Santa Fe came in at about $403. In the county, just under $400. Both were up roughly 2.5% to 3% year over year. At first glance, that might seem like a small number compared to what we just talked about with average and median price, but that's exactly why this stat matters. Price per square foot removes size from the equation. It allows us to compare what buyers are paying for space itself, regardless of whether a home is 1,200 square feet or 3,500 square feet. And what this data tells us is very important. Value didn't spike in 2025, but again, it didn't fall either. Instead, price per square foot continued to rise slowly and steadily. That's not a sign of a market overheating, it's a sign of a market absorbing change without losing ground. For buyers, this is reassuring in a very practical way. It tells us that while prices overall have gone up, buyers aren't widely overpaying relative to the size of the homes that they're buying. Value growth has been controlled. That means you're less likely to look back at a purchase and feel like you bought at an inflated moment, assuming the home was priced and positioned correctly. It also means buyers became more analytical in 2025. We definitely saw that. Square footage, layout, condition, and usability mattered more. Homes with awkward layouts or deferred maintenance didn't command the same price per square foot as well-designed homes, well-maintained homes. The market started rewarding quality again. For sellers, this stat carries a very clear message. Buyers are still willing to pay more per square foot, but they are paying attention. Price per square foot is no longer something sellers can ignore. Homes that tried to push beyond the market without justification were corrected, either through longer days on the market or radical price adjustments. This is another sign of normalization. In peak years, price per square foot can detach from reality. Emotions drive decisions, buyers stretch, sellers test limits. That wasn't the environment in 2025. Instead, the market cooled emotionally without cooling structurally. And that's a very healthy place for us to be. Another important takeaway here is how price per square foot interacts with inventory, which we're going to talk about next. Now, as more homes come on the market, buyers gained the ability to compare. And when buyers can compare, value becomes much clearer. That comparison pressure keeps price per square foot growth honest. Looking ahead to 2026, this starts to suggest something important for both sides. For buyers, it means the opportunity isn't about chasing deals. It's about identifying value. Homes that are priced reasonably for their size, condition, and location will continue to hold up well. For sellers, it means pricing needs to be defensible. Buyers are educated, comparisons are easy, and the market rewards homes that make sense on a per square foot basis. The key takeaway from price per square foot is this: Santa Fe didn't inflate in 2025, it recalibrated. Value became clearer, buyers became more discerning, and pricing started to reflect fundamentals again. That sets the stage for the next section, where we'll talk about new listings and why seller confidence returning is one of the most misunderstood signals in the market.
Now let's talk about new listings, because this is where the market psychology really starts to show. In 2025, new listings in Santa Fe were up just under 12% year over year. The county showed almost the exact same increase. That's a meaningful jump. Whenever people see this stat, the first reaction is often concern. More listings can sound like trouble, but context matters. This increase in new listings was not driven by distress. It wasn't forced selling. It wasn't panic. What it reflected was something much quieter. It's confidence. Homeowners chose to sell in 2025. They weren't pushed into it. As rates stabilized and prices held, more sellers felt comfortable re-entering the market. People who had paused plans in 2023 and 2024, they started moving forward again. That's an important distinction. In unhealthy markets, listings spike because people have to sell. In healthy markets, listings rise because people feel able to sell. 2025 looked much more like the second scenario. For buyers, this shift was significant. More listings meant more choice, and choice changes behavior. Buyers weren't forced to jump on the first home they saw. They could compare. They could step back. They could pass on homes that didn't quite fit. That alone changed the tone of the market. For sellers, though, this was the moment when strategy started to matter again. More listings meant more competition. Homes weren't selling just because they existed. Sellers had to think more carefully about price, condition, and presentation. This is where many sellers felt the market slow down, even though demand was still present. The truth is, the market didn't slow uniformly. It became selective. Homes that were prepared, priced realistically, and marketed well continued to move. Homes that leaned on past momentum often sat longer than expected. That's not weakness, that's discernment. Another important thing this stat tells us is what didn't happen. Even with listings coming on the market, prices didn't collapse. Inventory grew, but values held. That combination tells us sellers weren't racing each other to the bottom, they were entering a more balanced environment. And that balance is what set the stage for the next metric we need to talk about: active inventory. Because new listings tells us sellers are stepping forward, but active inventory tells us how much choice buyers actually had at any given moment. The key takeaway from new listings in 2025 is this: seller participation returned not out of fear, but out of confidence. And that's a sign of a market that's finding its footing, not losing it. And it's one of the reasons 2025 feels less dramatic in hindsight than it did while we were living through it.
Now let's talk about active inventory, because this is the stat that tends to trigger the biggest emotional reactions. In 2025, active inventory in Santa Fe City increased by just under 30% year over year. The county saw a very similar increase. That's a really big number. And it's easy to hear that and immediately assume something negative is happening. But this is where we have to slow down and be a little more precise. Active inventory simply tells us how many homes were available for sale at a given time. It doesn't tell us why they're there, and it doesn't tell us what prices are going to do with that. What happened in 2025 wasn't an oversupply problem, it was a choice problem. More listings came on the market and homes stayed available longer. That combination naturally increases inventory. And for the first time in several years, buyers had a meaningful level of options. For buyers, this was one of the most important shifts of the year. Active inventory rising meant you didn't have to make rush decisions. You could compare homes. You could walk away from something that didn't quite fit. You can negotiate more thoughtfully. Now, that doesn't mean that buyers suddenly had unlimited power, but it does mean that the pressure was eased. And that change alone altered buyer behavior dramatically. For sellers, this stat is where the market began to feel very different. When inventory is low, almost everything sells quickly. When inventory rises, homes have to earn attention. Buyers start filtering. They notice condition, layout, pricing, and location much more carefully. Now, this is where strategy separated results. Homes that were priced realistically and prepared well still sold. Homes that relied on last year's momentum often didn't, at least not without making serious adjustments. And that's not a market falling apart, that's a market reintroducing standards. Another important thing to understand is what rising inventory did not do. It did not push the prices down across the board. It did not signal distress, and it did not indicate that demand disappeared. Instead, it created balance. Buyers gained choice, sellers gained feedback, and feedback, while sometimes uncomfortable, is how markets stay healthy. Active inventory is one of the clearest signs that Santa Fe moved out of a one-sided seller's market and into something more rational. Now, that's not a step backward, it's a reset to normal. And this sets up the next metric perfectly, because active inventory on its own doesn't tell us who actually has leverage. To understand that, we need to talk about months of inventory, which shows us how supply and demand are interacting in real time.
All right, now let's talk about months of inventory, because this is the stat that actually tells us who has leverage right now. In 2025, the city of Santa Fe sat at about 4.5 months of inventory. The county was just under 5 months. That range matters. Months of inventory measures how long it would take to sell all available homes at the current pace of sales, assuming that no new listings came on the market. It's one of the clearest ways to understand the balance between supply and demand. For context, anything under 3 months is typically considered a strong seller's market. Anything over 6 months starts to favor buyers more heavily. 4 to 6 months is generally considered balanced. So what does that tell us about 2025? It tells us that Santa Fe moved out of an extreme seller's market and into a balanced one. That's a big shift, and it's a healthy one. For buyers, this meant leverage returned, but not dominance. Buyers have options, they have time, they could negotiate more thoughtfully, but they still had to be realistic. Well-priced homes in good locations continue to attract interest. This wasn't a market where buyers could demand anything they wanted. It was a market where buyers could finally make decisions without panicking. For sellers, this metric is equally important and often misunderstood. A balanced market does not mean sellers lose. It means sellers have to earn the results. In 2025, sellers still had equity power. Prices were supported. Demand existed, but homes no longer sold simply because inventory was scarce. Strategy mattered, pricing mattered, preparation mattered. This is why months of inventory is such a grounding stat. It tells us the market didn't tip into oversupply. It didn't swing wildly in the other direction. It found equilibrium. And equilibrium is where rational decisions happen. Another important thing to understand is that balance doesn't feel the same everywhere. Certain price ranges and neighborhoods still moved faster. Others slowed more noticeably. That variation is normal in a balanced market, and it's also why broad headlines often miss what's actually happening on the ground. Months of inventory reminds us that leverage is not binary. It's shared, and it shifts balance on how well a home is positioned and how prepared a buyer is. Now, looking ahead to 2026, this metric sets expectations clearly. For buyers, it suggests opportunity without chaos. You can be selective, but you can't be passive. For sellers, it suggests confidence with accountability. The market will support you, but only if your pricing and strategy makes sense. The key takeaway for months of inventory in 2025 is this: Santa Fe didn't become risky, it became reasonable. And reasonable markets are often the best environments for thoughtful buyers and sellers alike. That brings us directly into the next section: days on the market, which shows us how this balance actually played out in real transactions.
Now let's talk about days on market, because this is a stat that is very often misunderstood. In 2025, homes in Santa Fe averaged about 58 days on market. In the county, it was just under 60 days. Now, that's roughly a 16 to 20% increase from the year before. At first glance, that can sound like trouble, and we heard that all last year. Homes taking longer to sell often get framed as a sign that demand is fading, but that's not what this data actually shows. What days on market really reflects is buyer behavior, not buyer absence. In 2025, buyers didn't disappear, they slowed down, and that's a very different thing. During the peak years, homes sold quickly because buyers didn't have time to think. Inventory was tight, competition was intense, and hesitation meant losing the house. Speed was a survival strategy, not a buying strategy. That environment changed in 2025. With more inventory and more choice, buyers could afford to be selective. They could schedule second showings, they could compare similar homes, they could take time to understand condition, location, and value. That naturally extends days on market. For buyers, this shift was meaningful. Longer days on market meant less pressure. It meant space to inspect carefully, negotiate thoughtfully, and make decisions from a calmer place. The buyers weren't rushing, but they were still buying. For sellers, this stat required a mindset adjustment. Homes no longer sold simply because they were listed. They sold when price, condition, and presentation aligned with buyer expectations. The sellers who understood that adjusted well. Sellers who expected the old pace often felt frustrated. This is an important distinction. Longer days on market did not mean homes weren't selling. They meant homes were being evaluated more carefully, and correctly priced homes still moved. In fact, one of the patterns we saw repeatedly in 2025 was this. Homes that were priced right from the beginning still sold in a reasonable time frame. Homes that started too high often sat, then had to adjust, sometimes multiple times. Days on market became a form of feedback, not punishment, not failure, feedback. That feedback is something balanced markets provide and overheated markets just don't. Another thing days on market helps us understand is patience. In a balanced market, patience becomes part of the process for both sides. Buyers don't need to rush. Sellers can't expect instant results. That's not dysfunction, that's normal. Looking ahead to 2026, this stat sets expectations clearly. For buyers, it suggests opportunity without urgency. You can move thoughtfully, but you still need to be prepared for when the right home does appear. For sellers, it suggests realism. Selling may take longer than it did in the past few years, but that doesn't mean outcomes are weaker. It means timelines are more honest. The key takeaway from days on market in 2025 is this. Homes took longer to sell because buyers were thinking again. And a market where people are thinking is usually a healthier one than a market where everyone is rushing. And that brings us to the next metric, which ties directly into this idea of selectivity and realism, percent of list price, and what it tells us about negotiation returning in 2025.
Now let's talk about percent of list price, because this is where negotiation, real negotiation, shows up in the data. In 2025, homes in Santa Fe sold for about 97% of their final asking price. In the county, it was just about the same. That means on average, homes sold 2 to 3% below the list price. Now, that might not sound dramatic, but context matters. In the peak years, many homes sold at or above list price, sometimes well above. Price was often more of a suggestion than a strategy. Buyers waived contingencies, they stretched their budgets, and competed aggressively just to secure a home. That environment didn't exist at all in 2025, and that's not a sign of weakness, it's a sign of realism returning. Percent of list price tells us how buyers and sellers are negotiating in real time. It shows us whether buyers are accepting prices as is, or whether the market is pushing back. In 2025, the market pushed back selectively. For buyers, this was one of the clearest shifts of the year. Negotiation came back, not on every home and not in every situation, but especially on homes that were priced optimistically or had obvious condition issues. Buyers were no longer forced to meet sellers exactly where they started. Now, that doesn't mean buyers suddenly had unlimited leverage. Well-priced, well-presented homes still sold close to the list price, but buyers had room to ask questions, request concessions, and negotiate terms in ways that hadn't been possible before. Now, for sellers, this stat carried an important message. Getting 97% of list price is still a strong outcome, assuming the home was priced correctly to begin with. But overpricing became much more visible in 2025. Homes that started too high often didn't get negotiated gently. They got corrected. This is where pricing strategy truly mattered again. In a hot market, pricing mistakes can be masked by demand. In a balanced market, they don't. Percent of list price becomes a form of accountability. Another important thing this metric tells us is how buyers were thinking. Buyers weren't trying to steal homes. They were trying to make purchases that made sense. Negotiation wasn't aggressive, it was rational. And that's a healthy signal. When buyers and sellers meet in the middle, it usually means expectations are aligning. And when expectations align, transactions move forward with fewer surprises. Looking ahead to 2026, this stat sets clear expectations. For buyers, it means negotiation exists, but only where it's justified. Preparation, market knowledge, and realistic offers matter. For sellers, it means pricing is no longer theoretical. The market will tell you quickly whether your price is working, and will do so through showing activity, offers, or lack of both. The key takeaway from percent of list price in 2025 is this: Santa Fe didn't lose pricing power, it regained pricing discipline. And discipline is what allows markets to function without extremes. That leads us naturally into the next section, pending sales, which gives us a forward-looking view of demand, and it tells us whether buyers were still stepping up to write offers.
Now let's talk about pending sales, because this is one of the most important indicators in the market. In 2025, pending sales in Santa Fe were up just under 4% year over year. The county showed a very similar increase. Now that's not explosive growth, and that's exactly why this matters. Pending sales are forward-looking. They represent homes that are under contract right now, buyers who have raised their hand and committed, even if the transaction hasn't closed yet. So when pending sales are rising, even modestly, it tells us buyers are still actively making decisions. In 2025, buyers didn't rush back into the market all at once. There was no surge, there was no frenzy. Instead, buyers returned with intention, with thoughtfulness. That's a very different kind of demand. For buyers, this stat is an important reality check. It means you're not alone. Other buyers are still writing offers. Homes that are priced well and positioned correctly are still attracting attention. This isn't a market where you can assume nothing is happening just because things feel quieter than they used to. Quiet doesn't mean inactive, it means selective. For sellers, pending sales are one of the most reassuring metrics in the entire data set. They tell us buyers are present, they are qualified, and they are willing to move forward when the opportunity makes sense. This matters because many sellers worry that higher rates or longer days on market mean that demand has dried up. Pending sales tells us that's not the case. Demand didn't disappear, it became more thoughtful. Another important thing pending sales helps us understand is momentum. In overheated markets, pending sales spike quickly and unpredictably. In declining markets, they fall sharply. In 2025, Santa Fe showed something else entirely: steady, modest growth. That's the pattern of a market that's finding balance. It also explains why other stats look the way they do. Longer days on market, more negotiation, and more inventory don't contradict rising pending sales. They support the idea that buyers are taking their time, not walking away. Looking ahead to 2026, this stat sets a realistic expectation for both sides. For buyers, it means opportunity exists, but so does competition. You don't need to rush, but you do need to be prepared when the right home appears. For sellers, it means serious buyers are active, but they're not impulsive. Homes that are priced right, prepared well, and marketed clearly are still converting interest into contracts. The key takeaway from pending sales in 2025 is this: the Santa Fe market didn't rely on urgency to function, it relied on alignment. And when buyers and sellers align on price, condition, and expectations, transactions still happen, even in a normalized market. That brings us to the next section, closed sales, which shows us how much of this demand actually made it across the finish line.
All right, now let's talk about closed sales, because this is the stat that stops talking and starts telling the truth. In 2025, closed sales in Santa Fe were up a little over 11% year over year. In the county, they increased by just over 10%. That matters. Closed sales represent completed transactions. These aren't intentions or contracts in progress. These are buyers and sellers who made it all the way through inspections, negotiations, financing, and closing. This is actual demand. And what this data tells us is that the Santa Fe market didn't just function in 2025, it started to regain momentum. For a lot of people, 2023 and parts of 2024, it felt like a stall. Buyers started pulling back, sellers hesitated, activity slowed, so there was a lingering narrative that demand had disappeared. Closed sales in 2025 directly challenged that idea. Buyers didn't vanish, they paused, recalibrated, and then they returned with clearer expectations. And when buyers returned, transactions followed. For buyers, this stat is important because it shows you're operating in a market that is liquid. Deals are getting done. Sellers are closing. This isn't an environment where everything falls apart at the finish line. That doesn't mean every deal is easy, but it does mean the system is working. For sellers, closed sales are one of the strongest confidence signals that you can look at. Homes are selling, not just being listed, not just going under contract, actually closing. But here's the nuance that matters. These sales weren't evenly distributed. They favored homes that were priced realistically, prepared properly, and aligned with buyer expectations. Sellers who understood the market they were in succeeded. Sellers who tried to sell the market they remembered often struggled. That's an important distinction heading into 2026. Another thing closed sales tell us is that buyers didn't just test the waters in 2025, they committed. That suggests confidence, not exuberance, confidence. In fragile markets, deals fall apart. Inspections kill transactions. Financing fails. Appraisals derail closings. You don't see strong growth in closed sales in those environments. The fact that closed sales rose meaningfully tells us the opposite. It tells us that buyers and sellers were able to bridge gaps. It tells us negotiations were successful. And it tells us expectations, while adjusted, were aligned enough to get deals done. Looking ahead, this sets a realistic foundation for 2026. For buyers, it means you're stepping into a market where transactions are happening, but not recklessly. Preparation matters, financing matters, strategy matters. For sellers, it means the exit door is open, but it's not automatic. You need to meet the market where it is, not where it used to be. The key takeaway from closed sales in 2025 is this: Santa Fe didn't just hold together, it's moving forward. And that brings us to the final metric, which ties everything together: dollar volume. Because when price and volume rise together, it tells us something very important about confidence and stability.
Now let's finish with dollar volume, because this is the metric that quietly confirms everything we've been talking about so far. In 2025, total dollar volume of closed sales in Santa Fe came in at just over $1.4 billion. In the county, it was just under $1.5 billion. Both were up close to 19% year over year. That's a big number. And more importantly, it's a meaningful one. Dollar volume combines two things: price and activity. You don't see dollar volume rise unless homes are selling and selling at solid prices. It's one of the hardest stats to fake. So when dollar volume grows this much, it tells us something very clear. Capital moved confidently through the market in 2025. This wasn't a market where a few expensive homes skewed the numbers. We already know median prices rose. We already know closed sales increased. Dollar volume simply confirms that those two things happened together. For buyers, this is a very important signal. It means people were willing to commit real money to Santa Fe real estate in 2025, not speculatively, not emotionally, but deliberately. Buyers assessed the environment and decided it still made sense to move forward. That kind of participation supports stability. For sellers, this metric matters just as much. Rising dollar volume tells us liquidity returned to the market. Homes weren't just listed and negotiated, they were transacted. Capital flowed. Sellers were able to exit when they met the market correctly. This is not what you see in fragile or declining markets. In those environments, volume dries up even if prices technically hold. Transactions stall, confidence erodes. That's not what happened here. Instead, 2025 showed us something quieter and more durable. Santa Fe absorbed higher interest rates. It absorbed more inventory. It absorbed slower pacing, and it still moved more money through the system than the year before. That combination matters. It tells us the market didn't rely on urgency to function, it relied on alignment. Buyers and sellers adjusted expectations, met closer to reality, and transactions followed. As we look toward 2026, this is the most grounding takeaway of all. The opportunity isn't about waiting for a breakdown. It's about understanding how to operate in a market that's balanced, selective, and still fundamentally strong. For buyers, that means preparation, patience, and realism. For sellers, it means strategy, pricing discipline, and clear positioning. The Santa Fe market didn't crash. We told you it wouldn't. It didn't freeze. It normalized, and then it strengthened. And that's exactly the kind of market where thoughtful decisions tend to age well.
So what does 2025 really mean for 2026? So when you step back and look at all of this together, a very clear picture emerges. 2025 wasn't a dramatic year, and that's actually the point. Prices didn't collapse, they didn't surge either. They rose steadily, both at the top and in the middle of the market. At the same time, inventory increased, days on market lengthened, and negotiation returned. Buyers gained choice, sellers gained feedback. and leverage became shared instead of one-sided. That combination tells us something important. Santa Fe didn't lose its footing in 2025. It found balance. We saw sellers re-enter the market voluntarily. We saw buyers slow down and become more intentional. We saw transactions complete at higher volume, not because of urgency, but because expectations aligned. And when you see prices, volume, and activity all working together, it usually means the market is functioning, not fighting itself. For buyers looking forward to 2026, the takeaway isn't to wait for a collapse. That story isn't going to play out. The opportunity now is clarity. Understand your numbers, understand your leverage, understand what trade-offs actually look like in this market. The buyers who will do the best in 2026 aren't trying to predict the market, they're preparing to move well inside of it. For sellers, the message is equally clear. The market will support strong pricing, but it will not carry unrealistic expectations. Homes that are priced thoughtfully, prepared well, and positioned clearly will continue to sell. Homes that rely on momentum instead of strategy, they're going to feel the market push back. That's not weakness, that's accountability. And accountability is what keeps markets healthy. The through line in all of these metrics is this: Santa Fe real estate didn't become easier or harder in 2025, it just became more honest. And honest markets tend to reward people who do their homework, move intentionally, and understand where they stand before they act. So if you're considering buying or selling in 2026, you don't need perfect timing, you don't need certainty, and you definitely don't need to rush. But you do need a clear understanding of your position in this market, because clarity changes how every decision feels. If you want help thinking that through, we're always happy to have that conversation. Not to push you one way or the other, just to help you and see the landscape clearly and decide from there. And that's what 2025 gave us. And that clarity is what makes 2026 so interesting.
All right, let's close this out with what all of this points to for 2026, because this is where the data stops being historical and starts to become useful. When you combine what we saw locally in 2025 with broader national forecasts, a pretty clear picture forms. 2026 is not shaping up to be a correction year. It's shaping up to be an activity year. Nationally, economists are projecting a noticeable increase in home sales in 2026, driven by slightly lower mortgage rates, improving affordability at the margins, and a large group of buyers and sellers who have been waiting on the sidelines. Prices are expected to rise modestly, not dramatically, and sales volume is expected to increase more meaningfully. Santa Fe tends to lag and smooth national trends rather than amplify them. And what we saw in late 2025 locally lines up with that pattern. Sales activity improved, dollar volume increased, prices held, inventory stayed elevated, days on market remained longer. That combination matters. It tells us Santa Fe already did the hard part. It normalized first. So, heading into 2026, the most likely scenario is not a market reset, but a market that sees more participation, more buyers willing to act, more sellers willing to list, more transactions overall. That does not mean everything speeds up again overnight. What it means is that the pause we saw in earlier years is giving way to movement. Here's what I think that looks like on the ground. First, sales activity is likely to increase, not explosively, but noticeably. Buyers who delayed decisions because of uncertainty, rates, or headlines are starting to accept the new normal. Sellers who waited for clarity are getting it. Even small improvements in rates tend to unlock more activity than people expect, not because of math, but because of psychology. Second, prices are more likely to continue rising slowly than they are to fall broadly. Santa Fe has already shown it can hold value in a higher rate environment. Average price, median price, and price per square foot all rose in 2025. That makes a widespread price decline in 2026 less likely, unless something external changes dramatically. Third, inventory is likely to stay healthier than it was during the frenzy years. That is a very good thing. More inventory does not mean weak demand. It means buyers have choices and sellers have to be intentional. Balanced inventory creates better decisions, better negotiations, and fewer emotional mistakes on both sides. Fourth, the market will continue to operate at two speeds. Homes that are well located, well prepared, and priced realistically will still sell, sometimes quickly, sometimes with competition. Now, homes that are overpriced or poorly positioned will sit, they will adjust, and eventually sell once expectations align. That pattern is not a warning sign. It is the definition of a functional, healthy market. So what are the real stakes heading into 2026? For buyers, the risk is not overpaying in a frenzy anymore. The risk is waiting indefinitely for a drop that will not come while good opportunities pass by. You will have leverage, you will have options, but you will still need to act when value shows up. The sellers, the risk is not missing the peak. That already passed. The risk is misreading the current market and assuming momentum will do the work for you. In 2026, success will come from preparation, pricing, discipline, and clarity around goals. The honest bottom line is this: 2026 looks like a year where the Santa Fe market continues to strengthen quietly. More movement, more confidence, more normal transactions, not dramatic, not easy, but healthy. And in healthy markets, thoughtful buyers tend to do well. Prepared sellers tend to do well. And decisions made with clarity tend to age better than decisions made from fear or urgency. That is the environment we are most likely walking into.
So when you take everything together, the story isn't about predicting the perfect moment or trying to outsmart the market. That pretty much never works. It's about understanding where we actually are and what that actually means for you this year.
Santa Fe has moved into a more balanced phase, and that kind of market doesn't reward urgency or hesitation. It rewards clarity and preparation.
So if you're thinking about moving to Santa Fe, you just need to reach out. Call, text, email, DM, whatever is easiest for you. We're going to help you get clear on all the details that matter for your lifestyle that you're after.
Let us be your guide.